Now, if anyone doesn't know what Adobe is, you've probably used it in your life.
Yeah.
Most likely in their Acrobat Adobe PDF reader. So everyone's definitely used it before. So why don't we go straight into it and say, well, what does the business do and how does it make money?
Okay, so Adobe is one of the largest software companies in the world. I think at the moment it has a market cap of around 200 billion, and chances are you've definitely encountered one of their products along the way. Like you mentioned, you have a Adobe Acrobat reader, and the reason for that is because Adobe was the original creator of the PDF file format. And since then, it's expanded into a full-on software business with a plethora of tools used throughout multiple industries. So I think one of the most commonly known ones is probably Photoshop, which is part of their Creative Clouds suite. And that is essentially a subscription service where people can sign up and then they have access to something like 20 odd different pieces of software for creative purposes. You have Photoshop for image editing, you've got Premiere for video editing, which is a popular one for YouTube. I think it's the one we use. And then you've got After Effects for visual effects, and the list goes on. There's so many. We break them all down within the premium report, so investors know exactly what they're getting into. But while that's the better known side of the business, there's also something called the Experience Cloud, which is the business facing side of things. And this essentially contains a whole bunch of stuff related to customer relationship management. They have an e-commerce platform, which they recently acquired to compete with companies like Shopify. They have a document signing business where you can author and sign digital signatures on contracts, which competes with companies like DocuSign. There's customer journeys and analytics, which is similar to stuff like MailChimp. And then you have an entire other section of the business, which is not really important these days. They call it publishing and advertising. And if anything falls under that category, it's basically a legacy service. They're slowly phasing out. And if you look at the revenue breakdown, that's actually been shrinking slowly over time. So they got their fingers in lots of different pies, so to speak.
Okay. And why don't we go a bit more into that revenue? So how does it work? Is it sort of a recurring revenue? Is it sort of direct to businesses, to consumers? What's sort of that breakdown and that makeup?
Okay, so Adobe targets both consumers and businesses. That they don't have a potential a preference between the two. Whoever will sign up, brilliant. And 92% of the revenue stream comes through these subscription services. So right now, if you wanted to sign up and use their software, you can go on the website, you pay a monthly fee, and you can either choose to have access to one or two different pieces of software, or you just pay for the whole lot in a bundle. And it's often a lot cheaper for individuals to do it that way. But the rest of the revenue comes from other channels. So they do still make money through third-party resellers, sometimes to original equipment. Like when you're buying a brand new computer, you get a free version of usually Adobe Elements. I'm not sure if that's still around, but it's some retailers still offer that. And then on top of that, they also offer support services for training and installation when you're dealing with enterprise type clients.
Okay. And how's the revenue done over the years? It seems like it's looking at the notes, it's gone from strength to strength, and the margins as well seem to be improving.
Yeah, the because the bulk of their revenue, like I said, 92% is recurring income through subscriptions, the user base tends to be very sticky, which results in quite high customer retention rates. You have to sort of estimate it because the company doesn't really go into the details about those sort of levels. But typically a customer will stick around for either 1 month, which is usually the free trial, all the way up to 3 years. And because they have so many industry standard tools in their portfolio of software, the customer retention rate is higher, and contracts get renewed constantly. So what's ended up happening is the revenue stream, like I said, has consistently been climbing, and that's thanks in part to more customers joining onto the subscriptions, as well as new technologies being acquired, which we'll talk a bit more in detail, but Adobe has a habit of doing a lot of those. In terms of margins, like many software businesses, most of the expenses are fixed. The exception being that because all of its technology is hosted on cloud storage, they have to pay cloud storage fees, which are increasing these days. Demand is going up and prices going up as a as a result. But if you look at the margins, Adobe seems to be passing on all those variable costs onto customers because margins have been improving. In 2017, operating profit was around 29%, which is very, very good. But today it's closer to 37%. So they've still managed to improve profitability even more. So bravo.
Yeah. And I mean, you mentioned it a bit earlier about subscriber growth and it's a subscription model, and just going back to that point about churn. So churn being, for those who don't know, churn is obviously you have subscription people, you have everyone who pays a subscription, and those who are interested, we're offering a free subscription to our service, themoneycog.com, and the link below. But how does Adobe manage that churn and still continue to grow those subscribers?
So we already sort of touched on this just a moment ago about its industry standard tools. Obviously gives it a nice advantage. In fact, today you can find plenty of alternative or even free software that fulfills a similar purpose to some of its existing tools. And yet the vast majority of professionals and individuals are willing to pay the extra to have access to these tools because they've existed for so long. They have a proper funding behind them. There's lots of development. That's obviously helping. But in terms of dealing with churn rate, a lot of these tools are quite complicated, especially for newcomers. I mean, I recently tried using After Effects. It didn't go well, completely lost on me there. But what Adobe essentially is doing in the background, which doesn't really get talked about much, is everything is sort of being constantly checked through data analytics. They're seeing where people are tripping up on their software so they can improve the user experience, make it easier to use. And they can, if there's particular issues constantly popping up on their forums or their help support or stuff like that, quite often the company ends up recording new tutorials that gets uploaded onto their YouTube and their website, and it gets added to the documentation. And the idea is that every time someone gets stuck, they can find a solution to that problem and then keep using it. And there is a learning curve. These are professional tools, but it essentially allows individuals to get better at what they're trying to achieve, which is a support platform it's not very common, especially with open source and free software.
Okay, interesting. Looking at the notes, there was one thing that sort of we talked about revenue just now and how they're growing and the balance between organic or acquisition in terms of, is it acquisition or organic led that revenue growth? And it seems as if in the last few years they've done a number of sort of good acquisitions, or maybe they haven't done good acquisitions. What are your views on the acquisition strategy going forward? And actually, is it a big part of their revenue sort of plans or strategic plans?
When it comes to Adobe, most of their technology that they have has been acquired. Since the 1990s, they've done about 50 acquisitions, which is quite a lot. They seem to be doing one a year, which is quite, again, I mean, they've got the cash flow for it, so okay, fair enough. So there's some examples. Recently, since the pandemic started, okay, they've acquired a video collaboration platform called Frame.io, very complementary to their Creative Cloud toolset. If someone's using Premiere or After Effects, you're working on a film or a YouTube video or collaborating on a project, you essentially use this tool and you can comment on different bits, and it accelerates the work process. Okay, nice. And then they also did, on the other side of the business-facing side, with the Experience Cloud, they acquired a platform called Workfront, and that allows businesses to manage like work schedules for employees, so get things to run more efficiently. Like you've said, acquisitions carry risks. Adobe doesn't exactly have issues with raising capital. Plenty of cash flow coming through the doors, courtesy of the subscription.
Yep.
But as a result of doing all these acquisitions, for so many of them for so long, if you look at the total assets of this business, roughly half of it is goodwill, which is a high proportion.
So how do you assess what's a good acquisition then? Is there a measure that you say, well, this is a good acquisition or that's not a good acquisition?
Acquisitions take time to sort of integrate themselves into businesses, so it's quite difficult to judge whether or not it was a smart move within the first couple of months. You usually have to wait a few years. But one metric you can use that we've found to be quite useful is return on invested capital. And it's a very simple formula. You take your operating income and then you divide it by your invested capital, which comprises of all the money the company's putting back into itself. And what you can do is augment that formula to include goodwill on the bottom line of that. So you have your operating income divided by invested capital plus goodwill. And what this is essentially showing you is the amount of value a company is generating based per dollar it's investing into its business. And when you include goodwill, it also tells you how much they're generating above and beyond what they paid to acquire these businesses.
Oh, wow.
Now, the margin between return on invested capital with and without goodwill for Adobe's case is wide. As expected, they have a lot of goodwill. But when you include goodwill, the return on invested capital is still 28%, and that's even with the pressures from the pandemic. And that's extraordinary.
Yeah, that's actually very, very good. I mean, it's probably one of the highest I've seen. Which leads to the next question, which is, they've obviously got good management then to make these acquisition strategies and acquisition targets. So who's been running this company? I read in the notes, started in the 1980s, so it's not too old. So you could think, are some of the founders alive? Are they running the business? I mean, who's running it?
The founders are no longer involved with the day-to-day operations of the business, and we discuss a bit more about that in the notes. But today, the company is run by a chap called Shantanu, and he's been with the company since 1998. He knows it inside out. He's a veteran. He's climbed his way up the ranks, and now he's the CEO. When it comes to judging management, again, it's sort of a tricky one because you can look at past performance and stock price, but in this case, it's less of an issue. But if you have a CEO that's recently come into the picture, that's completely meaningless. So how do you judge them? And this is something we talked about before. We prefer to take the route of looking at the different qualitative aspects through employee reviews, try and get an inside look on how operations are being run. Shantanu has been voted the second best CEO in all of America last year. So while he's not position number one, coming second is, it's pretty respectable.
Yeah.
And
he was number one.
He was number one. I can't remember the top of my head. I think it might have been Nvidia.
Oh, wow.
So there's we'll have to double check that, but yeah, in any case, it's still very good. Bravo to him. Now, an issue we sometimes see, which is something we discussed recently when we looked at Hewlett-Packard, is when you have someone who's been in the position for so long, there's the risk of becoming sort of obsolete if the company can't adapt. So far, Adobe doesn't seem to fall into that category. They constantly make acquisitions to improve their existing technology. Their technology is shifting with the time as well, which is, promising. We mentioned it right at the start. They have an entire section of the revenue stream is coming from legacy products. These are products the company is no longer investing capital into and is letting it die, just simply because it's no longer relevant today, or there's no point trying to get money out of a dead horse, or
So it seems like management seems to be doing the right things, and I think you've alluded to already, but what maybe just clearly define for those watching, what are the key competitive advantages that you found with Adobe?
Okay, I'm gonna share this for a section of the report quickly. Let me just open that up. Okay, so here we're in the premium report. There's a whole bunch of stuff here. We talk about management, some stuff we've already run through. You can look at the full report by clicking on the link below in the description. So when it comes to competitive advantages, we touched on this already. The ability of having industry standard tools makes it very easy to essentially, it adds a barrier against disruptive new companies and free alternatives and other solutions to solve the same problem that you're trying to tackle with your software. And the reason behind that is that when you're trying to go into a professional industry using these tools, Adobe's technology is more often not what's taught at universities. So every time you have a new generation of people entering the workforce, they know Adobe, so they're going to use Adobe's products. Now, free software, obviously, it's free. That's quite enticing. But when you have all the professionals who are trained to use, Photoshop or After Effects, they're going to continue wanting to use that when they move forward. These are not exactly easy tools to learn, so that itself adds a barrier to entry, and it creates switching costs. Now, we also touched on the fact that it has the fixed costs with its operations, bar the hosting fees for the cloud platform, which again seems to be passed on to customers. What I found particularly interesting, though, is what's going on with Adobe Stock. This is a service that is included with Creative Cloud, but you have to sort of pay extra if you want to use it properly. And it's essentially a giant library of stock footage, images, videos, vectors, the whole shebang. And you pay a monthly subscription, and that allows you to download resources, and you can use it for whatever various projects you're working on. Now, because the content on Adobe Stock is not created by Adobe, it's created by its users, when you add more content, the value proposition for someone paying to use this part of their service increases. As their value proposition increases, you get more customers. The more customers there are, the more opportunities there are for creators to monetize the customers. So more content gets added. And that creates a value building loop, which is still very small. It's by no means a significant contributor to the revenue stream yet, but in the future, that could be a serious driver for growth, and it's quite promising.
It seems, I mean, these points here are quite clear, aren't they? So you're saying it was market power, etc., and that, okay, you just stop sharing the notes, that's fine. But no, those who can look at the note, they can read it. The link below. Clearly, some good competitive advantages there. But what about any weaknesses? I mean, every company has a weakness. It's Achilles' heel.
Yeah, it's from a financial perspective, Adobe seems to be immune, but there is a growing risk. I don't think it gets talked about very much when it comes to regulatory intervention. A lot of technology which Adobe is involved in, like Photoshop and After Effects, visual effects, this sort of stuff, it can create realistic imagery, such as like a deep fake, which we've seen a lot, which can be misleading or objectionable. And that seems to be receiving a lot more scrutiny these days. If Adobe doesn't take the necessary actions to ensure that its products are not misused to create misleading content on the internet, in a world where there's so much basically crap information on the internet, and Adobe's technology enables you to create that, it's going to create issues to the point where they may end up getting regulatory intervention, or legal intervention rather. Now, another thing to consider, which, you know, their industry standard status protects them a bit here, but there are disruptive startups. The technology industry does not have high barriers to entry. Anyone with a laptop can start creating a new piece of software, and eventually someone's going to come up with something. I have no idea what it will be, but the likelihood is someone is going to come up with something that could seriously disrupt Adobe's revenue stream from a particular tool.
It's quite interesting because you look at things like Canva, and Canva dominates when it comes to social media posts. I think the majority of people use Canva than the Adobe Photoshop. But then when it comes to, you mentioned in your notes, which I agree with, it just Adobe's taught in it as industry standards when it comes to those who work in the creative profession. So when it comes to professionals using it, they'll still use it. It's a bit like, I like to say, it's a bit like Google Suites and the Office. That if you're in the accountancy or financial professions, you use Excel. You will never use Google Sheets just because it doesn't have this functionality and it's just not made for what you need it for. And any real deep work and analysis, you would use Google. You use Office. So it's a bit like, there's strong buying power in that, and that makes sense. And if everyone's taught it, it becomes an industry standard, and they don't really want to learn a new software and how to use everything again.
It's very difficult to convince universities to switch their curriculum, mainly because lecturers are lazy and they don't like having to rewrite all their lecture notes. But yeah, once you're in that position where your technology is what is taught, it is very difficult for that to switch. It takes a long time, and even if your technology is just slightly bit better, it won't be enough. You have to have a significant difference in quality or speed of use to essentially convince people, especially professionals, to change.
Everybody's lazy, and I think the reason why Canva works is because it's convenient, and that's why they'd rather use Canva than Adobe, because Canva's convenient and they can do what they want. And it's with social media.
Canva is the perfect example where it was built for a very specific purpose. Now, Photoshop can do the same thing, but because Photoshop was designed to be a universal tool, trying to achieve the same results, it's possible, but it will take significantly longer.
And I think Adobe has something similar where they created this thing called Adobe Spark, which was supposed to be a Canva-like thing, but I don't think it has taken off as well. It's a bit like somebody once said, well, to be $1 billion company, you need to take 1% of Salesforce's sales.
It's kind of
And
bonkers, isn't
it's
it?
just, so when you think about things like that, when you look at Canva and stuff, and it's the same thing where, like you said, you mentioned earlier, which is if a specific product they might lose from a category winning perspective.
Yeah,
You know, somebody gets a better product, better being maybe more convenient and easier to use with less knowledge time, then
yeah.
that could be a serious thing. So I think key area to look at is Premiere, because video editing has become videos as we are doing now. We use video editing software for this video, and YouTube, it's if somebody comes up with something better, quicker, more convenient, then what happens? So
There are so many video editing softwares out there now.
yeah,
So it's quite impressive that Adobe has managed to stay where it is, given the amount of choice available. I think that's partly thanks to its Creative Cloud suite, the idea being you pay for this piece of software and you also get everything else,
yeah,
which is quite an enticing proposition,
yeah,
which not
no,
many other companies can offer, really. There isn't a software business out there that has this much technology that across so many different sort of applications.
yeah.
Uh,
No, it's pretty
yeah.
pretty pretty impressive. But taking that all aside, we've talked about the strengths. We've talked about, okay, there are some weaknesses to be aware of. What about valuation? How do we sort of value this sort of business?
So when we did the valuation of the report, and with all our premium, okay, most of our premium notes, there are a few exceptions. We do discounted cash flow models. We create a model, we forecast the revenue stream and as well as profitability. And from that, we can derive a fair value based off the present value of their future cash flows. When it comes to Adobe, it's a little tricky to try and forecast forward because a good chunk of their growth has come from acquisitions, and unless you're clairvoyant, you can't really predict which companies they're going to acquire next, the market opportunities that provides, and yeah, so it's a bit difficult. So we decided to take a conservative approach and just assume it wasn't going to make any more acquisitions ever again. In reality, I think it's very unlikely that's going to be the case, but because we can't essentially guess what they're going to do next, it's the only option really available to us without creating some wild assumptions in the actual valuation model. Now, something else which is a little tricky, Adobe doesn't give much details in terms of its actual user base. I think existing estimates from other research groups have placed it around the $27 million user mark, but without access to those numbers, it again becomes a bit tricky. A popular method of forecasting subscription businesses is to forecast forward the user growth, and based off their average revenue per user, you can come up with the revenue. So that doesn't seem to be an available option when it comes to Adobe. So what we ended up doing is tried creating our own sort of proxy version of this by looking at the consistency within the existing revenue stream and at the market opportunities they're trying to tap into, especially with their business-facing side of the business, of the company, which is still a younger part of the overall picture. And we go into a lot more detail about what all these assumptions in the actual notes, but what it essentially boiled down to is the current value of the share price today. We estimated that the fair value of the business was roughly around the same figure. So the recent drop in the share price, courtesy of the market having a meltdown, or correction, I should say, because of all the situation going on with geopolitics and macroeconomic factors, not important. Yeah, so we estimated it was roughly in line with the fair value today. So if we're looking for my personal portfolio, I will admit I have been tempted to potentially add this to business. I haven't done that yet. I don't know if I will, but we'll see how things go.
You mentioned you'd add it to your portfolio. Maybe it's to do with the COG score, which we're not going to go into details now. People can go on our website. I think we'll leave it at that. They can go to the website to look at it. The COG score is in essence a score that values a company, well, values a company, but yeah, in instance, it scores a company between 0 to 100, and those closer to 100 will be a business which we like more and we think it's a better opportunity. You can find a lot more descriptions about it and how it works on our website. But that's been a great conversation on Adobe. It looks like a company definitely worth looking at in your portfolio. And actually, I think I would advise everyone who's watched the whole video to go look on the notes on the website, and it's in the link in the description below.